Okay, let's get going. Hi, I'm George LaRocque with WorkTech. Thanks for being here today. It's always interesting at the end of a quarter to look back on the global WorkTech VC investment, see what trends impacted things, what's happening in the world of WorkTech. And I appreciate your choosing to spend some of your time here today. If you have any questions as we go through, please use the Q&A tab. Enter your question there, and I will do my best to pause a few times, take a look, and definitely I usually at the end I have a couple of minutes for questions. If I can't get to something today, I will follow up with you independently or offline, I should say. Okay. The recording of this will be available at WorkTech, so at oneworktech.com. And you'll be able to access it right from the report that we'll publish later today. So this information is sort of first seen here for you. Also, if you have any issues visually or audio, drop it in the Q&A and I'll try to catch it there as well. All right, let's get started. So a little about WorkTech. If you're here, I'm assuming you know what WorkTech is. It's an analyst and advisory firm. We work with employers, tech providers, and investors. The simplest way to think about our role in the market is to help these constituencies understand each other. We have a very unique lens because we look at the growth capital that's coming into the space. We track that, and you'll see some differences between our data and some of the data that's publicly available in the market. I think we have the best, most thorough data on the global WorkTech investment in the space. We don't just look at that, though. That started about 7 years ago, and we really look at the trends that are impacting the global workforce, the trends as far as buying behavior. We look at budgets, not just direction of budgets, but we actually capture data about how much folks are spending on different products and categories across the whole WorkTech stack. So that is WorkTech. About 24 months ago, we launched the Impact WorkTech Accelerator. Quick note here, and then we'll move right into the data. We are targeting launch of cohort 3 at the late end of this month, April 2023. And there are still opportunities for startups to engage. So if you are a startup founder and interested in being mentored by investors, operators from the industry, and HR and talent leaders that have a real interest in impacting the future of WorkTech, go to impactworktech.com, and it's a quick apply. If you'd like to be a mentor, or if you're an investor of any stage, we have room for you potentially there as well. So that's Impact WorkTech. That's been exciting. We've had 2 cohorts, and we're excited for the third. A lot of interesting folks have been applying. Okay, so I've had this slide for a few quarters now. Is it a bull market? Is it a bear market? I think, with all of the economic uncertainty, it's a very difficult market right now for startups, for investors to make sense of it, for everyone. But there's some interesting things about WorkTech that make us different. One of them is the performance that we've seen while the rest of the market at large has been struggling. We've had impact too, but we're sort of a bright spot in the market, and we'll get into details on that in a moment. So what were the numbers? In Q1, we saw 2.2 billion across 80 deals. You can see that here. And what's interesting is how that represents an uptick. And even if one of the biggest deals was Rippling, who raised another 500 million, that still puts us back on par, or actually just ahead of Q4 if you back that out, of Q4 of 2022. So nobody can make sense of the performance or the market in general. We've got years of data here showing our performance, and we maintain a database. We're looking not just at the top line numbers, or I always say, look, a quarter does not a trend make. So it's important to look back over the last year, the last couple of years, and get some perspective. Speaking of perspective, let's go ahead and get some now. So there's an exercise that we've done now twice. This time, in fact, it was just last week, we had noticed that TechCrunch, they published an article about global VC, and this is at the time when we're rolling up our Q1 numbers, and the whole context of their article was that they couldn't wait for Q1 numbers, and they're not thinking about us, but just in general. So they went to PitchBook and they mined all of the data there that they could. And PitchBook is one of those, public sources of VC data that you may access or have access to. And the way they characterized the VC picture globally was that it was a continued decline. And you can see this is the recent, Q4 here. And once again, we're not moving in the same direction. We're, this quarter at least, we outperformed last quarter and the quarter before that. So that's an interesting disconnect. It's not the first time we've seen this disconnect. And again, not the first time we've done this exercise. Last year, when the market was really starting to be impacted globally around for venture capital, CB Insights published their data. It was shared widely by Scott Galloway from the Pivot podcast and Prof. Galloway podcast. He put this chart out. This chart went viral. People in our space where everybody's hair was on fire. And we looked at it and said, well, let's run the same numbers, the same quarters, and take a look at this 2021 and the first half of 2022. Now, as you saw in the previous chart, after the first half of 2022, we saw our impact, but we weren't seeing the impact like the rest of the market at that time. And it's interesting to have this perspective, and there are some reasons for that, for why we're operating that way. But before we dig into that, I've used this chart before as well, a little differently. There's a sort of context in the market at large right now where, we had this crazy year in 2021, 18 billion came into our space in 2021. And that you can see that here. Prior to that, the two biggest years were the 2 years previous, so 2020 and 2019, at about 5 billion each. And the first half of 2022 carried on at a, as you can see here, at a healthy clip, while the rest of the market was declining. We were moving. There was only one quarter in 2021 that outperformed that first half, but that's an anomaly, right? Look at the amount of VC that came in. This was like peak bubble, if you will, if that's what we experienced. And if you remove the anomaly, it looks like this. So I think it's important to have that perspective. It's a difficult market to raise capital. It's a difficult market to navigate your go-to-market. It's a difficult market for a buyer to make sense of the economic condition and the labor market and where they should be investing their budgets. But HR tech, from all of those perspectives, not just investment but adoption, is doing better than the rest of the market. And the context here, we're actually doing better than our best years if you remove that anomaly. So it's just a little perspective. I tried, that's, I think, one of the key roles that WorkTech has, is providing that perspective. Now, what's going to happen next quarter? We had the Silicon Valley Bank thing, and money is not tied up in the bank, but folks are having a hard time moving their money to new banks. A lot of the investors that I talk to, especially the firms that have larger sums of money, it's a real interesting challenge, so that when it's hard to get banks, not that it's hard for them to take your money, but it's hard for them to process things quickly right now, because there's a long line of investors at the banks that do well for them. So that's the these things, we don't know how that will pan out, and anybody that tells you that they do is full of it. But that's the picture. So that's sort of the high, the backdrop. So why is WorkTech unique? Let's drill into some of why we've performed differently and outperformed the rest of the market. There are a bunch of factors that have to do with the macro trends that have been happening for decades, right? This is not a COVID-19 reaction. When I know I'm talking to an investor that doesn't understand this space, when they start saying things like, well, that was COVID-19 and a reaction to the pandemic, and things are going to get back to normal, and will this space still be dealing with these issues? And or the market or employers still dealing with these issues. And that is someone who really doesn't understand what we've been dealing with, right? The War for Talent, that book from the McKinsey consultants, was written, or the study was done in the late 90s. I don't like the term war for talent, but nonetheless, it cast out a lot of the issues that we're dealing with now when it comes to skills and the workforce. The adoption of distributed work models, remote work. We didn't call it hybrid work in 2019 when we did this global study of about 3,000 VP and above leaders globally, but the adoption of distributed work in 2019 pre-COVID was at about 54%. Now, what does that mean? It means some model, right? So it could be remote working. It could have been, folks distributed around the globe. We've been adapting our approach to find, hire, and retain talent for decades based on the macro trends. One of them being the shrinking workforce. So we've seen this coming. We've been warned about it. And then recently there was a Lancet study. The US, the ratio of working to retired dropped by 25%. We just have fewer people in the workforce. We can debate whether that's labor market participation or this, or a combination of it, but the net result is fewer people in the workforce. This drop is very similar percentage, low 20s to up to 30% in modern countries around the world. The Lancet study is really interesting, and it looks at things like mortality and birth rate and age of retirement and so forth. Productivity has been declining since 2005. Even in this economic climate, the last jobs report that we pulled for this in March, 10.8 million jobs open. When we did the study in 2019, two of the top three C-suite issues, when we looked at the CEO, it was finding and retaining talent. When we broadened that to the entire C-suite, it was finding and retaining talent and declining productivity. So those two issues are still stinging in the marketplace. We've had a couple of little bumps in productivity, anomalies in the market, but we are still, this is World Economic Forum, data and other data that supports the declining productivity. The other issue that I don't have here, but we've got a report coming out very soon, is about the skills challenge. So is it a skills gap? Or is it a skills half-life issue, that skills are changing so quickly that we need to adapt to the fact that 10 years from now, all of the hard skills that you may be recruiting for or people that are trying to retain will be completely different than they are today. The half-life of a more technical skill is about 2.5 years. So, it's becomes irrelevant in just in a few years. Big challenges for us in HR and talent to deal with. And these are not new. These are decades in the making. And these have created the environment that we're in right now. Most of the tech providers that I talk to, and these range from multi-billion-dollar HCM platform players to everything in between, but down to, seed, pre-seed and seed level or stage tech providers. It's like a best of times, worst of times conversation. So the more established players who have product and market diversification across market segments and industries saw a trajectory on revenue like this go like this, still growing. Decisions are taking longer. Money is still being spent, et cetera. But it's a shift. Others who might not have been as diversified, earlier stage, didn't have product market fit, or they weren't fully out in the market, things are a little tougher for them. Okay, let's keep moving in the interest of time. The other things that we have that make this a really interesting space, I can't think of a business challenge or societal or technical challenge that WorkTech is not addressing. Here's a laundry list and it goes on and on. The other thing about this space and why investors like it, and why I think it's been one of the more buoyant, markets, is that the work that we had just done for the big WorkTech report, the emergence of this category sort of bringing HR tech along with it, the market will be about $1 trillion with a 20% CAGR by 2026. Why? Because we're still seeing in the existing markets, let's say the more modern markets from a geographical perspective, we're still seeing expansion of new technologies as well as in market segments. So we're seeing technology being adopted in the SMB in the middle market that wasn't adopted just a few years ago or 5 or 10 years ago. We're also seeing adoption in emerging markets. So we're seeing incredible adoption of technology in Latin America, in places in Asia Pac that we didn't see it before, in Africa, and in other European regions that where we hadn't seen that kind of adoption before. So when we even discount adoption globally, given maturity of different markets, we end up with this number. It's a very big market, and there's a lot of green field left. And while we're seeing that adoption, we're also seeing startups bubbling up. We're seeing market leaders move into those spaces that I just mentioned. So it remains an exciting time. And in this kind of market, in this uncertain market, call it a down market, however you want to characterize the negativity around it, this is when brands, when businesses look for opportunities to grab market share. That's partly with expansion, the way I've talked about, partly with mergers and acquisitions, but this is the context of the market today. So grab the report. There's a QR code. You can always, it's easily found off oneworktech.com. So let's dig into the Q1 2023 numbers. So one of the things that I try to point out a lot is that there's this thought that, the VC money that's flowing into the space is going into a lot of, apps or targeted applications, or what we used to call point solutions. And that's just doesn't bear out in the data. It never has. So you'll see the number one category for Q1 was HR suites and platforms. And again, think about what we just talked about for the emerging markets and the adoption in market segments in modern, in existing footholds geographically, as well as new markets. Look at payroll. It's not just employee of record solutions anymore, or global payroll, but some really interesting fintech / payroll hybrids that have been coming to market. Marketplace job boards, they really surprise everyone. One of the first things that we noticed in 2016, 2017, as we started capturing the data uniquely, was that the talk about job boards deaths was really premature and has never happened, right? And the thing about job boards is they've really shifted into this marketplace model. So it's not just a classified ad job posting model. We're seeing really interesting hybrids where they're bringing learning into it. They're bringing workforce management. They're bringing staffing models. They're bringing services and value add for the candidates and for the employees. And they talk about the extended workforce. They're working with freelancers, contractors, et cetera. These are marketplaces that are driven by connecting candidates of any kind, freelance, contract, full-time employment, to employers who need them. And in this market, in this economy, those types of marketplaces and access to talent, especially the more extended workforce, are going to do fairly well. We've seen it every time there's a shift in the economy, every time the cycle hits. That's really how the contingent and contract staffing market came about, was through the late 90s and dealing with the economic turmoil there. Not a big surprise on learning. Learning is, bless the chief learning officer, learning gets reinvented every 4 years. The consumerization of technology hits learning hard, as does any new trend that allows for more personalization or a better experience. I mean, that's true across the board, but it really hits in learning. So we see a lot of new models get adopted, exploited, rinse, repeat, right? And AI and machine learning are good examples of things that are impacting learning right now. Categories that are not on this, or one more that's really interesting, workflow automation. We're now seeing bespoke automation applications or tools that are HR-centric, talent-centric, recruitment-centric, that are API as a product driven in many cases, and really streamlining efficiencies within the business, and while they're providing a better experience for employees and candidates and back office users, if you will. Internal mobility is bubbling up, and analytics is something that has been on fire for a long time. And I don't just mean for VC investment, but for adoption as well. So one of the categories that are, a couple of categories that didn't make this list, because we have over 50 subcategories that we look at. And there is consistency on the top 10 or 12 from quarter to quarter and year to year. We'll see that in a moment. But staffing is one. Keep your eye on staffing. The staffing industry, as much as a lot of folks have been gunning since the mid 90s to disintermediate staffing agencies, it's never happened. The staffing industry globally continues to grow. It's something like approaching $700 billion at this point. And while everyone's been gunning for them, they innovated the HR outsourcing model. They innovated the recruitment process outsourcing model. They, led the market into the contingent workforce and freelance side of the marketplace. And I'm seeing a lot of plays in staffing that are reaching into the end customer environment via marketplaces, via sort of the same playbook that the job boards took, right? Adding more value, becoming more transparent, becoming more data forward and tech forward. I talked to staffing firms recently, and They're talking about giving access to their portal, access to their data. It's really interesting. We're early in a lot of this, but I would keep my eye on market-leading vendors like Bullhorn. We did an interview with the CEO, Art Pappas. You can find that here at oneworktech.com. Really interesting insights about that market. And I think it's, they're not moving in, and I'm not saying they're going to take over. I'm just saying that that market is changing, and all of these categories in our space are sort of collapsing on each other. And that's one where I think there are fewer and fewer differences between our sources of insight there. Okay, so let's move forward and look at the subcategories in Q4. So how did they differ? You'll see a lot of the same subcategories here. You'll see analytics was not on the list. You'll notice learning had a great, a much bigger Q4. The API as a product, integrations and API category was one that fared pretty well. Employee experience. Now, the thing to do is not react quarter to quarter. Again, a quarter does not a trend make. So when I go back and we look at the year of 2022, you'll see a lot of consistency here and a lot of the real deeper insights. There's staffing bubbling up throughout the year as a side note. A lot of the deeper insights come on the yearly view, but also what's off of this top 10 list. I mean, it's too cumbersome and would take too much time to review 50 subcategories or even 20 or 30. But that's something we're happy to do, depending on whether you're trying to make sense as a buy, to buy this stuff and see what's coming, who's innovating, or invest in it. Or if you're a company that's taking products to market to understand what's coming in the next wave, or who your competition is, et cetera. Okay, so again, interest of time, let's keep going. So I'm mentioning adoption. In our WorkTech report, we looked at the tech stack today, what folks are using, whether their budgets would be increasing or decreasing, what those budgets were, what products they were using, if budgets were increasing or decreasing, by how much, and what were they adding to their tech stack. We also obviously had a lot of demographic information about the customers and users. And what's interesting is whether you're again, I said, sort of best of times, worst of times as the context, one of the key context themes about the market. That's true for the employers that we work with as well. And whether you're growing, whether your hair's on fire because you can't keep up, it's a high volume environment, you have a hard time hiring a lot of frontline folks or back office folks, and you're on a growth tear while you're trying to retain employees as well, or whether it's a slowing, you're hiring less and looking internally. Both of those are driving new tech adoption. So we're seeing a lot of replacement of platforms. If you've noticed on the 2022 list, ATS was still there, HR Suites was still there from an investment perspective. They're on the adding to the tech stack list as well. They're also on the budget increase lists, and the budgets are increasing across the market by an average of about 40%. I was just out at an event in Las Vegas with a bunch of HR leaders. This was validated there. It's been validated again and again. We're really take seriously our role as to being a source of truth. So we're constantly trying to poke holes in our own numbers. And this is one that when we published that report, we delayed the report by about a week or two to go vet these numbers, because this was, late Q4 data when we rolled it up. And as we get into Q1 with all the market uncertainty, we continuously look at it. So if you're interested in having a chat about that or whatever, reach out. We're happy to dig in. Again, the adoption in the SMB and middle market continues to be a major factor in driving increased adoption of the technology in the space. But also, there are it's alive and well in the enterprise, the larger enterprises also, and we're seeing an extension of capabilities across the enterprise, as well as some of that replacement. So larger enterprises that may be, tightening the belt. This is a time when they will look internally at transformation projects, and the smart ones are getting ready for the next wave, because this is cyclical. This will change. This will come back, and there's a lot of muscle memory from the pandemic and the lockdowns that were associated with it. A lot of companies really pulled back aggressively. And when it was a very brief blip on the radar screen and they needed to come back, they were, caught with their pants down, as they say, and had a lot of catch up to do, and lost a lot of resources where they would have, retaining them would have been a much more strategic thing. All right. So I think we've talked about everything there. So last quarter, I made a bunch of predictions, and I try not to change them quarter to quarter, but I thought a prediction check-in would be of interest. And a lot of these insights go hand in hand with that report I've been mentioning. So everything that can be automated will be automated, is the way I usually put it. Automation, automation, automation. It's happening. I'm not just talking about, I'm going to say it, I'm not just talking about, when I say automation now or AI right now, folks leap to Chat GPT and large language models. And yeah, that's coming. That's being looked at and explored in HR. But automation is, like pure workflow automation. And we're seeing a bunch of that as you go back to the results for this quarter, but also leveraging AI on the back end for users and candidates and employees, providing a better experience. Automation is not new, but right now we have the ability to deliver automation by leveraging these newer technologies and more modern technologies, and we're seeing companies, again, whether you're in a growth mode or whether you have fewer resources and need to do more with less, we're seeing adoption of automation. It's either making us go faster with better quality and be more efficient, or that's our goal, or it's helping us do those things with fewer resources at the desks, right? The people data explosion is incredible. We talked a lot about people analytics back in the mid 2000s, but what we're seeing now, along with driven by the emergence of WorkTech and the sort of focus on experience and focus on data fluidity and access, is a lot of really exciting things happening with people data. Labor market data across the enterprise, data from systems of work and systems of record outside of HR being merged with HR data, recruitment data, labor market data to do, strategic workforce planning, business strategy, looking at, talent strategy, location strategy, M&A, et cetera. So check on those predictions, still alive and well. The extended workforce is going to boom, especially what happens with these economic cycles is, certain categories will almost like an accordion expand, and then, or maybe a pendulum is better, swing to an extreme and then come back, but they never go back all the way to the other end. We learn a lot and about these trends. We learn a lot about these processes and about these technologies, and it swings back somewhere in the middle. And that's what we're starting to experience around extended workforce technology right now. No longer is HR or the business thinking about the extended workforce as a matter of procurement and a matter of the business line leaders driving everything, but looking at being compliant, looking at how these folks are really a part of our team, a part of our culture. What is the impact there? Getting everybody on board from a financial perspective, and providing a good experience, and another type of flexible talent pool. Adoption is growing, is sort of chugging along. I predicted that WorkTech investment would thrive. I got a lot of pushback on that. So I'm going to gloat for a minute and say, wow, look at the numbers this quarter compared to the last two. I think we just have systemic issues that we're dealing with that we may have a tough quarter or two. Again, that SVB thing, who knows how that's handled, going to treat investor sentiment. But I don't see in the context, the bigger picture, the last 5 years, I don't see this slowing down. There's a ton of merger and acquisition activity, and a lot of, one quarter we didn't see new innovators emerge, but they are emerging, and I'm excited about this. So I'm going to check off on all of those predictions and say that at this point in the year we're doing pretty well. So I'm going to wrap it up, and whether you're an investor, whether you're an HR leader, talent leader, whether you're a tech provider in the space, you can get involved in this ecosystem in a few ways. And I'm not talking about the WorkTech ecosystem as a business, but the WorkTech as a market ecosystem overall. We just happen to be one of those conduits. One of the things you're doing is attending this, getting this information. You'll be able to access more and more data on WorkTech if you're subscribing, and as a market insider, that's free. But I'm chairing, WorkTech is sponsoring the industry's largest global investor forum. It's happening on the day before HR Tech. It's in conjunction with HR Tech. To put it in context, last year at HR Tech, there were over 250 investors who identified themselves as investors. That doesn't even begin to touch on the angels and other folks who were there that didn't list themselves as investors. And for the first time ever, HR Tech has invested in really in that ecosystem of investors and startups. And it's not just early stage startups, it's the investors that we have coming here that we're talking to are really at all stages, from angels and pre-seed types up through to large investment banks and private equity. So investors can attend that for free, and it's something that I would urge you to take a look at, and you'll find links to it if you use that QR code. The same QR code will also give you some information about our new virtual pitch sessions for startups, and that goes hand in hand with our angel syndicate. So we're all about reinvesting in the community and making connections, and we're trying to do that at a scale that isn't held up by like 2 cohorts coming out of the accelerator per year. And some folks are too early stage or too late stage for the accelerator. So it's something we're excited about. And of course, you can access data and insights. And we opened up some data access for the first time, and with a different format. We moved away. We still use Power BI on the back end, but we moved to a different tool on the front end. You can still access that data there, but we're going to have more views available. So that's all I have for you today. Let me hit the Q&A. Question about the SVB thing and what impact that'll have. I think I've addressed that. I've got a question about M&A activity, and do I expect any of the larger unicorns to be impacted and potentially have an exit? Yes, I do. There are a number of folks that raised a ton of cash in a very different market with valuations that were not valuations they would get today. They have been or are trying to get into down rounds in order to buy time. But I would expect that you'll see some acquisitions that get positioned as mergers. I expect that you'll see some downsizing. The unicorns are especially where if you look at the layoffs that are really still rampant throughout tech at large, that's where in HR tech we see more impact than other areas. And I think we'll, unfortunately probably see a little more of that. I mentioned Galloway. He talks a lot about the sort of growthy companies, companies who were out over their skis, as they say, in the hiring for growth that was, yet to come. And I think that's where we see it. So yeah, I think that's a great question, and I think that is something that that I would expect. I tend not to name drop here, but I've got a little watch list. Okay, that's about all the time that I have. I hope you enjoyed this. You'll get notified, since you're here, when the report is up. If you're a market insider, you'll have access to it. Thanks for being here. Thanks for watching, if you're watching the recording later. And interesting times. Can't wait to follow up again soon.